Hey guys, Stock Saturday and happy Christmas to everyone. I am recording early on Christmas Eve because the markets have just shut and I'm a bit busy on Saturday morning as well as Boxing Day, of course. So I thought pre-record this just before Christmas. And yes, it's been a slightly good week, sort of underperforming the market ever so slightly, up about 1.3%, I think. Not too much. The S&P is up 2.27%, so a little bit better. And the Nasdaq is slightly better than that, at 2.5% on the nose. So, yeah, tech is sort of doing slightly better than me. I thought, well, somebody made a comment last week that sort of given it's the end of the year, maybe rather than sort of do a portfolio review of, how the year's gone, that I maybe sort of reassess my holdings and, see if anything's changed and, yeah, sort of go through each of them basically. I mean, we can all do a sort of review how we've done for the year and that sort of thing. And yeah, I mean, I think I'm up about 90% for the year on the whole portfolio, whereas the even the Nasdaq is up 17.7%, S&P's up 14.77%. So yeah, I've obviously done considerably better than the market. A great deal of that has come from the herein options, which obviously I'll come back to. But yeah, rather than sort of go through everything and toot my horn about how well things have done, that's there's not a lot of constructive use to doing that. It would be, I agree, much better to sort of assess things going forward and say, yep, this year is pretty much done. Am I still happy holding everything that I hold going forward, or should some changes need to be made, or some thought at least to it? So yeah, I thought let's have a look. So now I've finally, cobbled all of the accounts together into one tab on the spreadsheet, rather than having individual accounts, and it was very difficult to sort of assess like sector breakdowns and that sort of thing. It was always sector breakdown per account, which isn't particularly useful. I can now look at sort of individual sectors and the stocks sort of within those, so that's a little bit better. I do think I should probably get rid of a lot of this cash, so just sort of going into the invest account, and I should probably zero off that cash because most of that is going to be for a tax bill due sort of end of next year from selling the herein options and things. So yeah, just sort of making this look a little bit more realistic rather than being 14% cash that shouldn't be there. Now this starts to look rather interesting. So and it gives me my sort of more realistic portfolio weights. So 16% in mining. Obviously, it's a very, very large part of the portfolio and sort of dominates the top three positions as well as many others throughout here. So KGHM, obviously I have a fairly bullish stance on copper. This is US copper, so you had the sort of tariff nonsense, middle of the year, and then it sort of dropped down. If you look at the copper sort of worldwide in actually in Chinese yuan per ton, I believe, that sort of gives you a little bit more of a normal trend upwards for the year, and it's continuing. So yeah, I'm bullish copper, certainly. Sort of electrification going forward. The US needs to be rebuilding their electrical grid. You got electric vehicles. China, I believe, are sort of at a huge percentage now of new vehicles being, if not hybrid, fully electric. So they need an awful lot more copper. They're also electrifying an enormous amount, solar panels and electric grid upgrades. So yeah, I think everything is just going to end up needing more and more copper. So very, very bullish on KGHM. You know, it's stayed sort of at a very, very similar price in the sort of 110 to 130 range for quite a long while, and now has suddenly got its skates on. They also have their large part of silver, so that has rocketed up and is continuing to do well. Thesis hasn't really changed. I think the copper and silver price should start to feed in through to earnings going forward, and yeah, I think it can continue to do well. I think a main sort of theme with the miners is sort of current prices not being factored into the earnings. The earnings are obviously lagging. You know, last we've had is end of September earnings, so all the recent price action we won't see until sort of end of January into February, and yeah, I think we'll sort of get a boost. I don't think the industry is or institutions are really paying attention to most of these stocks, so you know, sort of January, February, I keep saying this, the next earnings should be good, and obviously you know, next earnings should be very, very good. Q1 earnings that we get in sort of early May time should be even better than these, since price has been going up all of this quarter. So kind of a similar story with Fresnillo and Coeur Mining, Equinox Gold. You know, price has done really, really well, but I think, you know, when the earnings come out, people start to focus more on these profits. Either the multiple goes up, or you know, they start doing more and more acquisitions, and that sort of makes the headlines, or they do buybacks. I think for the options point of view, I'm hoping they do sort of buybacks more than dividends, because obviously dividends, you know, you get the money and the share price sort of either stays where it is or is, you know, hindered by that a little bit, whereas buybacks all go into the price. So, and if we think the stock's undervalued, then I would say buybacks are fine. You know, it's a bit different to sort of Apple and, you know, Microsoft and people like that doing buybacks at sort of over 30 times earnings. You know, if the stock's at 10 times earnings, then quite fine with buybacks rather than dividends. So, yeah, an awful lot, obviously, in the mining sector. That's on the main stocks, and then the option side is obviously very, very large indeed. I decided to just sort of on activity for the week to sell off 50 contracts of the Equinox Gold. Sort of went on my little rant last week that I thought Equinox were making a bad move, selling off their South American operations, basically all. So that's 25% of their production gone for $1 billion. I didn't really think they needed that $1 billion. So, yeah, unless they know something rather drastic that I don't about South America, I thought that was a bad move. So, you know, it's not all gone, obviously. I still hold some stock, as well as, you know, 140k's worth of Equinox options. But I may be doing some more sales. Obviously putting it into a rather risky bet on B2 Gold, increased that from 900 to 1200 contracts, and that's now a very, very large position, dependent on sort of the Mali government, admittedly, but you know, they have gold outside of Mali, but yeah, I think sort of betting on that resolving itself, or just not, you know, causing any issues going forward, the profit should come through, and that should do well. And I put some more into Hive, sort of expecting Bitcoin to continue to do well next year. So, yeah, continuing to sort of monitor the situation, and could be selling some more Equinox going forward, with this being sort of such a large position of the portfolio. So, yeah, I think that is pretty much the mining sector. Obviously got some, you know, smaller positions, but that is, you know, these top three and Equinox, and then the options, that is sort of the bulk of the position. And as I say, just looking at the charts, we've obviously had all-time highs, new all-time highs up from the October the 20th high of 43.51. I think it was up a little bit more intraday, but yeah, we're now sort of pretty much touching 4,500. It did get to 4,520 late last night, sort of in the futures market, and silver even better, up to 72, sort of mid $72. So absolutely crazy. I think silver in particular, since a lot of companies, a lot of miners, all-in sustaining cost is still sort of not even on this yearly chart. You know, we're talking $20 some of them all-in sustaining cost. So actual price being 3.5 times all-in sustaining cost is just, you know, dreamland. We used to be sort of happy with, like, on the gold side, sort of being $500 above all-in sustaining cost. I mentioned last week with Equinox, you know, now sort of price being $3,000 above lots of companies' all-in sustaining cost. It's looking rather good. So as I say, all of this sort of recent price action still needs to go into the earnings, so it'll come some in Q4, and if it stays here for Q1 should look a lot better. So yeah, the mining sector will continue to be a large part of my focus. So semiconductors, nearly 10% of the portfolio. Obviously we're talking about Applied Materials, we're talking about Broadcom, Taiwan Semiconductor, Samsung. I have, again, sidetracking a little bit, I have made a sale of Vici Properties, sort of not particularly unhappy with Vici basically, but I wanted to add to my Samsung position, and you know, Vici was sort of looking a little bit tired. You know, they've got a huge amount of debt, and I don't exactly think Las Vegas is doing particularly well from what I've read. Could be sort of, you know, years before people really start picking up their activity there, and you know, Vici don't exactly see, you know, they don't see that pickup straight away. They just get their rents, so it could, you know, you could get Las Vegas come back to life, and then, you know, it takes a couple more years before they can really start increasing their rents notably. So yeah, I decided to you know, sell that off and put it into Samsung, where I see quite a bit more growth. So yeah, that's semiconductors, and also a small position in Himax. Obviously most of these positions are all kind of going on the same thesis of chips in general still being very, very strong. So looking at Taiwan Semis, November number did come out a couple of weeks ago, 343 billion, not quite a high. It was higher in April and slightly higher in October, but 24.5% year-on-year growth. Very nice. That is, you know, almost all of the year done. We just got December, and yeah, it's looking just under 33% growth, basically a third on last year. So more chips needed for AI, more data centers, essentially means more equipment from Applied Materials, more equipment from Broadcom on the sort of interlinks and sort of bits and pieces that they do, and ASIC application specific chips. And obviously Taiwan Semi get, you know, the majority of everything. Nvidia chips, competitor, you know, Google chips, Amazon chips, you know, they all basically come to Taiwan Semiconductor. So yeah, like them as well. Samsung have a little bit of that sort of competition with TSMC, but they also have the memory side competing against Micron and SK Hynix. They're sort of a little bit unloved, you know, they're a bit behind on both sectors really, on the memory and the compute side, but there's potential for all of them, I believe, with how big the sector's going to be. Samsung done a deal with Tesla, to supply chips for their cars, and it's sort of sounding like they're gaining a little bit of ground back on the memory side. They are actually, I still think, by volume, sort of the largest memory supplier, even if they are a little bit behind on the cutting edge stuff for Nvidia. So I think they can get some love. Also, on the consumer electronics side, the phones, I think, with AI coming, there's sort of a lot of talks that there's going to be a resurgence in new phone buying, to have onboard AI. So, yeah, Samsung kind of have fingers in all of those pies. And basically, the whole semiconductor side, I think, kind of revolves around how much stuff TSMC are pushing out. So my tech exposure doesn't really need all that much explanation. It's 5%. There isn't sort of a huge amount here. Amazon, kind of like I call them tech, but it's more the physical side of tech. Amazon Web Services and, their sort of small commitments to AI. Sort of prefer the physical stuff if possible. I do have Meta on the sort of, a little bit of AI, but also a very strong legacy business backing it up, which I quite like. Not really moved a huge amount from my average cost, so yeah, it's doing okay, but still at a sort of reasonable valuation, I think. And technology wise, I do count sort of Evolution. It's only a sort of fairly small position. I kind of count that as technology, being basically software, but sort of for a very different thesis, of course. That I'm, happy to sort of leave where it is, to be honest. I'm not really adding a huge amount to many of these individual stocks. My focus still is on, monetary debasement and commodities, gold and silver and crypto, sort of basically for the next year. So, yeah, not really adding all that much to these individual stocks, other than making some switches like Vici for Samsung. So yeah, technology, is what it is. You got to have a little bit of Mag 7, and those two are my picks. So financials, kind of made it relatively clear that I don't really do banks, so I want to have some financials outside of that, and I very much like the sort of monopoly, oligopoly type businesses. So I have a little bit of CME Group. They sort of have a huge stranglehold on the commodities side of things, so obviously expecting that to increase. Derivatives sort of increasing more and more. Quite like them for that. BlackRock being the largest asset manager in the world, sort of competing against Vanguard, but they do, a lot of stuff that Vanguard don't really, sort of more on the money management side of things, active management, and even getting into crypto now a little bit. So, yeah, quite like BlackRock going forward. Most of these haven't really changed all that much in sort of valuations and PEs. They sort of broadly track the market PE, to be honest. And also have Euronext, sort of doing okay, slightly in the positive, with a little bit of dividends come on that as well. Euronext sort of issue or deal with an awful lot of the debt side of things. So yeah, with sort of debt increasing, in particular on the euro side, but I believe they sort of get involved in some of the international debt as well, and my thoughts on how much that's going to be expanding. So I wouldn't want to own the debt itself, but sort of a company that makes fees out of dealing with that debt is marvelous. And last time I was looking, it was sort of one of their fastest growing sectors, and is decent margin. Euronext still making 30 to 35% net profit. Not really much to talk about. It's maybe not the fastest grower, but I want to have it there in the portfolio. So energy, 3.5%. Not your sort of typical holdings. No oil here. Obviously, oil everyone's sort of talking about being crude oil under $60. Brent crude sort of hovering just about 62. It did go under 60. So yeah, neither looking particularly positive, and people sort of suggesting that you jump in on your Exxon Mobil's and sort of maybe Shell and people like that on the UK side, expecting oil to go up. I'm not particularly expecting oil to sort of suddenly rebound. I think sort of going forward, the big energy push is going to be natural gas, nuclear, and renewables, sort of as a combination. Natural gas sort of seen as the slightly more greener of the fossil fuels than oil, and then nuclear being sort of net zero, but you have to do something with the waste, or it's green, but you have to do something about the waste at least. And then renewables. So if we're going more electric vehicles and higher energy need for data centers and things, then yeah, just not sure oil sort of fits into that in the way that it did in the past. So yeah, not really wanting anything sort of oil focused. So Next Era Energy, EQT Corporation is sort of basically all of my energy exposure. A bit of natural gas and a bit of sort of renewables, natural gas, all in one great big stock. So yeah, not a huge sector for me, and not wanting any exposure at all to oil really. So agriculture, quite a large sector for me, 8.1%, and not doing particularly well so far. Spread across some sort of that you could call industrial, Deere and AGCO on the sort of farming manufacturing side, and then the sort of commodity side with CF Industries. Ingredient, I suppose. It's not really agriculture, it's more sort of food production, but I've lumped them in with agriculture. Adecco Agro and FMC Corporation. Obviously, FMC being particularly bad at 55% down. I do sort of, the idea here was that we sort of move a little bit more away from livestock farming and sort of going a little bit more vegan. Not as if the whole world is going to, but climate change pressure, I think, will at some point sort of push people to go a little bit more, if not vegan, then vegetarian at least, and sort of thinking that needs an awful lot of land, needs more fertilizers and all sorts of things, and obviously the machinery to go with that. I know, I'm aware that there's sort of, there's ways of using less fertilizer and things, sort of only spraying the crops that need it, and yeah, FMC has sort of been whacked a fair bit. It's not a huge position, and I can sort of take a few thousand, 10, 12,000 loss on that. Yeah, doesn't have a massive impact on the total portfolio, so yeah, not some I'm sort of imminently looking to average down on, just kind of leave it there as it is, but yeah, happy to sort of hold all of these as a basket. Adecco Agro is sort of obviously a little bit strange, being like 3/4 owned almost by Teva now, so yeah, not sure exactly what they're going to do with them going forward, but it's still a business, whether Teva want it or not. Ingredient, I'm sort of fairly happy with. The sort of additives, I think, are needed more and more. The more I look at labels on food and things, just see essentially ingredient products all over it. CF Industries doing okay, considering where the sort of agriculture industry is, and Deere and AGCO, as I say, should in theory be needed more and more. So I don't really pay too much attention to these. Quick check in on the earnings, and they don't move a huge amount. So yeah, leaving agriculture as it is basically. So industrials, 4.5%. None of these are sort of huge holdings. Sort of biggest one being Rockwell Automation. Again, sort of some of the semiconductors you could call industrial, but these are just sort of my picks. So sort of non-semiconductor manufacturing basically. So I've got Rockwell, I've got AB Limited, and I've got Caterpillar. Yeah, basically pretty happy with them. Again, sort of ones that I don't need to pay too much attention to. Very sort of long term on the automation side with Rockwell and AB. That's not gonna come tomorrow. Certainly, some of these will be involved in sort of humanoid robots and things. I'm not part of the Tesla camp that believes that's coming in the next sort of 3 months or whatever people are saying these days. I think that'll take years and years. So happy to hold these for hopefully many years. And Caterpillar, I just think more construction is going to be needed. Certainly on the US side, they seem to want to build an enormous amount. You've got, sad as it may be, rebuilding Ukraine. Whether they'll use sort of Caterpillar, machinery, don't know, but it could be drawing demand sort of from elsewhere, and then Caterpillar pick up some of the remainder. I just think worldwide there's going to be more demand. So yeah, 4.5% on industrial, kind of leave them as it is. So 5% on crypto is a little bit different. I've obviously got the allocation to Bitcoin and Ethereum, kind of looking to hold these long term if possible. Appreciate I may have to move these into an innovative finance ISA or sort of do something else with them, but in some form or another, looking to sort of hold some crypto long term. So that doesn't really change all that much. One change that has been made is the herein options. So sold out completely of the herein options because they ended in March and sort of didn't really like that time limit. Not sure where sort of heirein's going to go by March, expecting it to sort of have a reasonably good year next year. But yeah, just didn't want to sort of hold that time limit really. So I sold out entirely of the options and bought the same amount in stock. So it was about 19,000 quid. It's down a couple hundred quid since then. And I now just hold 600 shares. I mean, basically, the stock's sort of at $42. The strike was at 15. So once I get sort of that far above the strike price, they're not really. There's no sort of explosive growth in those options really. Stock sort of goes up $2 and the options go up ever so slightly more than that. So it was basically like holding the stock, just with slightly more risk holding that time limit. So I thought just swap it for the stock. So I'm now an herein stockholder and I can hold them sort of maybe till the end of next year, maybe beyond. Who knows? So yeah, that's the crypto side. And then REITs, obviously with Vici going, it's a fairly small section now. Alexandria Real Estate, which has been going very poorly, but I still think they can sort of rebound somewhat. American Tower, I have to admit, has sort of been, it was possibly on the chopping block, similar with Vici, and could still be potentially. I think 5G and sort of, guess they're getting a little bit involved in data center, not all that much. It's still sort of really a cell tower company. I think can still do well going forward. Interest rates coming down, still has a bit of potential. And Prologis as my third one, sort of still pretty happy with them and think they can do quite well going forward. I probably wouldn't be looking to sell that off, but yeah, 2.4% in REITs, not a huge amount. And then the last two big sections, although options is 0.1% smaller than mining, but it's still pretty big. I sort of put a target of sort of 5% of the total portfolio being in options, but I'm quite happy with it sort of being much larger than that when I think the potential is here for much bigger gains. So maybe the 5% is sort of more of a long-term target when I feel options don't have their upside potential. Maybe they always will, but that's just my degenerate side. So yeah, I've sort of kind of gone over the thesis with all of these. Obviously the Core mining ones will sort of come to zero basically in very short order, because these expire in 3 weeks, and I'm not looking to sort of roll those into, you know, longer dated ones on Kerr Mining. I don't sort of exactly think that's got the explosive upside. So yeah, I don't really want to buy the stock either. So over the next sort of 3 weeks, at some point, I will sort of have to bite the bullet and just sell these. They're well in the money. I think it's sort of $4 strikes, and the stock's at, you know, 19, whatever it is, $19 or something. So yeah, it's basically just selling them at the opportunistic time. And then ETFs at 20.6%. So obviously I want this to go much, much higher. I've got my sort of targets down the right here. Is it sort of a target of the total portfolio, like 500 odd grand, and I'm at 290. So I want these to go much, much higher. That will come from possibly selling off more of the options, possibly selling some stock when it potentially gets overvalued. I've got some of these stocks are, you know, once I've taken out the cash now, are quite a bit over my target weights, but I'm not exactly looking to sort of sell these straight away. Just to sort of remind people, the red doesn't necessarily mean sell. It just means that it's over my sort of target weight. So yeah, I'm still fairly happy with holding, you know, someone like Fresnillo, even though it's 3.5% instead of 2% of my target weight, and you know, the 40% ETFs is hardly sort of set in stone. I don't mind that it's below that for now. This is a long-term target once some of the sort of gold and silver thesis plays out, and yeah, things get a little bit more normal, if they ever do. So ETFs at 20%, cash, you know, I sort of have a small target of cash. I'll always have some cash, obviously, but yeah, I'm essentially at like 16% cash at the moment until that tax bill gets paid off. So yeah, I have to see sort of how things go for the next year, but that's really how I'm thinking. My sort of attention is pretty much all on commodities at the moment, in sort of gold, silver, and crypto, counting crypto as commodities. And I kind of let most of these stocks do their thing, and sort of, you know, compared to the options and sort of crypto side and that sort of thing, they tend to have much, much smaller gains and losses. So yeah, that's where the focus is, and here's to a good 2026, hopefully. So happy New Year, everyone, and let me know how you're getting on, what you're looking to buy for the next year, or what sort of themes you're getting into, and like and subscribe. See you soon.